As investors, we want to avoid stocks when they are doing this, and we obviously want to be in them when they're doing that. There's a very simple concept that if you understand it, you can avoid this and participate in this. And that's what I'm going to teach you this week, how to buy the right stocks at the right time. Then I'll do my regular analysis of the markets. We've got a pretty important move in one of the charts that I look at each week. And then finally, we'll look at the day trade of the week on CRBP. All right, so what stocks do we want to avoid? What stocks are trouble? Well, it's not really the stock that's the problem. It's the timing. It's the condition of the market around the stock. We want to avoid stocks, obviously, that are in downward trends. And yet, although I say obviously, it's quite common for people to buy stocks that are trending downward. This is sort of like trying to paddle a canoe up a river. Even if the company is a good company, if you're fighting against pessimism around the stock, you're just not going to do well. These stocks are trouble. And so there's a simple concept that if you understand it well, you can avoid the lousy stocks and focus on the good ones. And it really comes down to understanding who's in control of the market. Are the buyers in control or are the sellers in control? And you can tell the difference from the stock chart based upon whether there's rising bottoms on the chart or whether there's falling tops. Now, the stock scores indicators, which you can get at my website, stockscores.com, will also help. When the stock scores are below 50 and trending down, probably a good time to avoid. And when the stock scores are above 50 and trending upward, then it's worth considering. But let's look at a couple of charts, and we'll start here with the chart of Netflix. And let's just first identify this concept of falling tops and rising bottoms. So here you had rising bottoms. Here you had a new high and then your first falling top. And we had falling tops all the way through this downward trend. And then the falling tops gave way to rising bottoms right here when you broke up from a rising bottom. Now this is on a weekly chart, so this is a very long-term view. You can do this same concept if you're day trading or swing trading. Just look at the chart that you would analyze for whatever time frame you like to trade. For a long-term investor, I recommend looking at the 3-year weekly chart. And in that case, Netflix would be a buy here because that's the first break up from a rising bottom. And it would be a sell when it broke down from a falling top back there. And so you can be out of the stock below 600 and then back in the stock at about 280. And 280 back up to where it is now at 575. Of course, it had a great week this week as it gapped up earlier in the week. Now, let's talk about Tesla. A lot of people like Tesla, but you shouldn't like it that much because the chart is in the control of the sellers. You can see the tops are falling and the stock has been trending lower. Now, it is at the bottom of its, what we call a channel, so it may bounce back soon, but until it's breaking up from a rising bottom, so here you've got a little rising bottom, and you broke up there, and you had a little run for 6 weeks or so. If we go back here, falling tops, build of a rising bottom, break up from a rising bottom, and it went for a nice move to the upside. Then it gave way, rising bottoms gave way to falling tops here, falling top, break down from a falling top, and the stock went into a downward trend where the whole way the tops were falling. And notice when the tops are falling, that sentiment stock score, the green line, is below 50, telling you that it's best to avoid that stock. When it starts to build rising bottoms, then you see the stock scores get better. They get above 60 and they move up. And you can get the stock scores for free at stockscores.com. It doesn't cost anything. You just punch in the symbol of any North American listed stock and you'll find them there. All right, well, let's get into this week's market analysis. And we're going to start off, as we always do, with a look at the S&P 500. It's been doing really well. And if we take that same concept that we talked about, it had rising bottoms through here, falling tops through here, made a little rising bottom there, broke up from a rising bottom around the middle of November, and has been trending higher ever since. Now, it's still a market in a bullish trend. It's getting a little extended perhaps, but the buyers are in control, so the large cap US stocks look pretty good. Now, that's the daily time frame. If you go to a 1 month shorter term time frame, you see essentially the same thing. Bottoms are rising from left to right, and therefore the buyers are in control. Now, we did have a little period in here early in January where the market was kind of going sideways. Really wasn't rising bottoms or falling tops. It was just a sideways market. But then mid-January, we broke through resistance from a rising bottom, and that's led us to the last 10 days or so of strength. Well, let's take a look at the NASDAQ market, QQQ. Look at the 3-year weekly chart. There you can see falling tops gave way to rising bottoms, break up from a rising bottom there, 320 up to 420. But here we had a top, a falling top, and the market went down. It's really that simple. It's all about gauging who's in control of the market. If the bottoms are rising, the buyers are in control. If the tops are falling, the sellers are in control. You want to avoid markets, whether it's markets or individual stocks, where the sellers are in control. Well, how about the small cap stocks? IWM is the index for the small cap stocks. And what we can see is that we had falling tops from the summer into November. That gave way to our first rising bottom, break up from a rising bottom, breaking the downward trend line. We had a pretty good market in the small caps up until the end of December. And since that time, we've had some little falling tops. Now, we broke the cycle of falling tops, but we haven't really broken upward from a rising bottom yet. So this market is looking a little better, but it still needs that show of strength with a breakup from a rising bottom. So I would be more cautious with the small cap stocks than the large cap until that happens. Let's take a look at the Toronto Stock Exchange, T.XIU. We'll look at the 3-year weekly chart, and you can see that we've got a little bit of rising bottoms building, and we've managed to get through this resistance level, but it's still kind of a wishy-washy market. Generally, it's sideways. We've got, sometimes there's a rising bottom, then there's a falling bottom, then there's a rising bottom, then there's a falling bottom with the tops. Got some rising tops and you got some falling tops. It's not really trending, not like it was here. Back then, we had consistently rising bottoms on the chart. The buyers were in control. So I'm not as optimistic about the Canadian market because of that lack of buyer control, that lack of rising bottoms on the chart. Now in gold, we had some rising bottoms through the period right here, and that was broken recently. We haven't really made a significant cycle of falling tops. You can see we've got one, but if we were to break down through this floor, then we would be falling through support from a falling top, and that would indicate gold more likely to move lower. Hasn't happened yet, but it is gearing up for that. You see the pattern slowly building. Now, if we look at the intraday chart of gold, you can see here that the falling tops are building towards a line of support. And again, if we break down through that, it's going to be negative. So I think you want to be cautious with gold. It hasn't really given us the strong negative signal yet, but that could happen any day because we are close. Now, here's the important chart that I wanted to talk about this week. USO, because look what's happened on oil. Oil was in a condition of falling tops. It started to build rising bottoms through January, and then this past week it's able to break up from a rising bottom, and it's been showing strength this past week. That tells me that oil is on the recovery and likely to move higher. So I think that oil is definitely getting better. Short term, it's bullish. Still long term, it's got to deal with this resistance, but it is looking quite a bit better. Well, let's look at the US dollar now. Fed decision coming up on interest rates. You can see that the US dollar is rising, and that is relative motivated by the bond market, which I'll look at in just a moment. Looking at the short-term chart, you can see the buyers are in control in the short term, but we're still fighting the longer-term pessimism. Well, Bitcoin is an important chart for many in the market, and you can see that the rising bottoms were broken here, but there was not yet a formation of a falling top. It broke down from a new high, and so that's not that bad. You know, we like to see breakups like this from a rising bottom. Here we are breaking down, but not from a falling top yet. And you see right at the end of this week, we moved up in Bitcoin. And that could be the market going to rally a little bit. Maybe it'll make a falling top and then break down. So it's still a slightly bullish market, but I do think you want to be cautious because it is showing the topping pattern that I'm concerned about. And here you can see on the short-term chart, this is the 2-hour chart, there's your upward trend line broken. And if we fail to make new highs, so the market would have to go all the way up to new highs, but if Bitcoin fails to do that, makes a falling top, and then breaks down from a falling top, then it's time to get defensive on Bitcoin. Final chart we're going to look at is TLT, which is our bond market chart. And you can see that here, bottoms were rising. So that means the bond market was moving up. That means interest rates were moving down because it's inverse. But over the last 3 weeks, the bond market has moving down, which means interest rates have been moving up. And that's why the US dollar has had some strength. Now, if we can break this little pullback line, if the Fed says something that gets the market a little bit optimistic again, then we will have broken a downward trend line from a rising bottom, and that would mean the bond market likely to go higher and therefore interest rates likely to go lower. So this is a really important chart to watch this week because we have a Fed decision on interest rates, I believe, on Wednesday. All right, so my ratings then. Bullish on both time frames for US large cap and NASDAQ stocks. Small cap stocks, not as good, neutral on both time frames. Canadian stocks bullish on both time frames, but not as strong as the American. It's sort of playing catch up. Gold neutral. Oil bullish now in the short term, still neutral long term, but it is turning. US dollar short term bullish, long term neutral. Bitcoin short term neutral, showing some signs of topping, but long term bullish still. And then bonds still bearish on both time frames, but that could easily change this week. So keep a close eye on that chart. All right, let's look at the trade of the week now. This is a day trade from Friday. It's a stock that was behaving abnormally, trading with a lot of abnormal volume. And if we draw some lines on here, you can see that there was my action candle, this little yellow dot there. That's something that an indicator I created, which looks for abnormal price and volume. And it broke a pullback from a rising bottom. That was the first run higher. Then the market made another pullback. It switched from falling tops to rising bottoms and made another action candle here and went for another little rip to the upside. Then the rising bottoms gave way to a falling top, breaking the trend line, and that's when the trading day was over for CRBP. Although it didn't have a good afternoon, these runs here, that's 4 RR, that was 6 or 7 RR. Even if you only take half of it in terms of where you sell, you're still netting 4 or 5 RR, which means reward for risk. If you make 5 times risk, if you risk 100, you make 500. If you risk 1,000, you make 5,000. That's the kind of approach we have to trading. And of course, you can learn more about Active Live on the Stock Scores website. Well, hope you've enjoyed this week's Stock Scores Market Minutes. If so, click on the like button. Do you think the Fed is going to imply that rates are going down, or are they going to show some concern about inflation? That announcement coming up this week. Love to hear what you think is going to happen. Make sure you post it before Wednesday. Hope you've enjoyed this week's Market Minutes. If so, click on the like button, subscribe to the channel, and as always, trade well.